my name is James Nicholson. In this video, I want to talk about, are house prices going down? Should they go down even more, and where they might end up this year? Well, to cut to the chase, house prices are actually down more than 10% from their peak in March 2022. I'm going to explain why that's the truth as opposed to what we get in the news and what we can do about it, and why this is actually very good news for property investors or anyone that has any kind of debt. So before we jump into that, as always, if you haven't done, subscribe to the channel over there and hit the bell notification. We're on the way to 25,000 subscribers. You might get some value from this channel. Every day we talk about house prices, inflation, data, property investing, and much, much more. So do subscribe for that. And while you're here, smash the like button, tickle the like button, do something to that like button. Even if you hit it out of anger for being asked, that really helps with the YouTube algorithm, and it gets us more views on the channel. So please take a moment to do that. So, house prices, it's been volatile, hasn't it? It's been a very volatile time, and over the pandemic, it really made logical sense that house prices would go down. And that's when I started this channel, and that's when I started investing for my two daughters. I've got two girls. I've got Emily, who's 3 years old, and Georgia, who's 23 years old. And I wanted to build a portfolio for them. I've already got mine sorted. Obviously, I want to add to that as well. But I want to make sure, should something happen to me, that the girls have got something set up as well. So that's why we started looking for properties. And when we started looking, the market was just so busy. I remember we went to some viewings in Birmingham, was one area we were looking at, and 25 people were at this viewing at the same time. God knows how many went throughout that day. We looked at auctions. Houses were going more expensive than they were actually listed for, and actually they were worth if you bought them through Rightmove or something like that, which was crazy because people had disposable cash. So that didn't happen. House prices didn't go down then. Then inflation came about from all the money printing that we did, from basically supply chains being shut down. And inflation in the UK was over 11% for a while. And that was really difficult for a lot of people. That then meant interest rates went up 14 times in a row. That then made affordability more difficult on property. So surely then we would have a house price crash. But what people did in that scenario was they just sat out of the market. In fact, last year was a very quiet year for a lot of estate agents. People just didn't move. You think maybe you had a 5-year deal, you were on 2% or 1% even. If you move, some lenders won't let you carry that deal over. And so in that scenario, you've then got to go on to a 5 or 6% rate. People just weren't willing to do it. So that caused a massive cool down in the property market. Now we've got high rates that have peaked. They're fairly stable. The Bank of England is not indicating much that they're going to decrease those rates anytime soon. Well, in fact, today they did say in the news that it would be late summer at the earliest we would see rate cuts, because we officially came out of a recession this Friday, which was good news. But still, the market has still been fairly flat. So far this year, we've had a 1% drop in house prices in March. And on an annual basis, we're 0.3% down. So not massively lots happening there. Average house prices are 288,430. So what's going to happen? Well, I think that this year, again, could be a relatively flat year. I think that short term, you're going to see some more drops. I think you're going to see maybe 1 or 2% more downward in real prices. And I think that that's going to happen because people have come into the market now. There are more sellers in the market. At Easter, there was an influx of sellers. If there's not enough buyers to match up for that, then there will be reductions in order to get that. But what's also happened is the Financial Times did a good article recently, how inflation has already caused a silent property crash. And it was really interesting to see. So since March 2022, The UK average house prices in real terms are down minus 13.8%, which is a hell of a lot. That's a crash. Anything over 10% is a crash. And that's because the value of the money that you can get out of those houses is now worth significantly less. So let's talk about that. Let's just say you had a 100 grand house, you had no mortgage on it, you sold it, and you could buy whatever. Let's say maybe you could buy 2 Lamborghinis or 2 sports cars secondhand with that kind of money. Now, the inflation stuck around and inflation eroded the value of those things. Then the next time you went to buy, your house is worth 100,000, but maybe the car has gone up in value because of inflation. And that means that maybe you can only buy 1 2/4 or 2/3 of that Lamborghini now. So your buying power is significantly less. Hopefully that makes sense, right? So the 100 grand in 2022 is worth around 14% less today, right? And so if we went to the shop, we took 100 grand, we went shopping, bought MacBooks, phones, clothes, shopping, pasta, whatever you want to buy, all the stuff that's been impacted by inflation, petrol, those sorts of things, the buying power of that is significantly less. That means that affordability has actually gone up because people have had some pay rises now, and affordability is improving for a lot of people. So this is effectively a silent property crash. Now, why is this good for an investor? It's good for an investor because the debt that you've got is also worth less now. So hopefully you've had some sort of pay rise, and that means that debt maybe is a little bit more affordable if you haven't had an interest rate rise. And so that's important to understand, that inflation is eroding the property value. Now, what's interesting is they're saying since 2007, when we had the last peak, in the north of England, house prices haven't gone up. In fact, they're still down since 2007. So the Financial Times are saying in the north, house prices are still effectively 27% cheaper than they were in 2007. Now that's good, because that means affordability is going up. And that's why northern house prices aren't being hit like southern ones at the moment. The north is nearly up 4%. The south is down nearly 2%. And so that is a good sign for investors in those types of area. It's still affordable. No, normal people in normal jobs can afford to buy a house there, even with higher interest rates. And that's not changing anytime soon. So where are we looking at house prices? Well, if inflation keeps staying high, which it is still too high, and it could go up at the end of this year, then that effectively is eroding house prices still, but it's not hitting you in your pocket. So if you have a debt or a mortgage on it, you're actually happy with that. And this is a better way for house prices to go down in value, rather than the house going from 100 grand to 90 grand, which hits you hard and loses your equity. Hopefully that makes sense. Let me know your thoughts on this. Where do you think house prices are going to end up this year? I think that you'll be 1 or 2% down by the end of the year. I think you'll see a drop now for the next few months. And then when the summer interest rate cuts, I think the market activity will pick up again, and that will bring the house prices up marginally. And then by the end of the year, I think we'll be 1 or 2% down in total. That's my thoughts. Comment below with your thoughts. Smash the like button, smash subscribe. Go and check out some more videos on my channel, including this video right here.